members and like member, welcome to another almost a second closing bell for the week ending 20th of December 2013. We are only about 2 weeks to the end of a 2013. So traditionally, today we've been a bit busy. We got client walking into the office asking about their status of their portfolio. I hope you all did as well as we did, at least with around 10 to 12% return for the year for your entire portfolio, and that's what we are doing. So we're quite happy with the performance. A lot of clients are happy to. We kept to our goal to able to give the kind of return. Again, it all depends when the client open up a company. How has been your return so far? Can you just share with me what is your return been so far? Right, just give me a figure. There are a couple of people I spoke to the student. Some were doing quite okay. Some was just breaking even as they are learning about it. Can you tell me what kind of return you made so far? All right, just want to share with me what kind of return you've been doing so far. I would like to know how well you fare as the market did pretty all right this year, right? It's been as what I forecast to. Even Singapore has recovered so far. Just give me a yang when you're ready. All right. So as you can see, our KLSE market for the week ending 20th of December 2013, we are seeing red here. Partly this is due to the, we are getting very close to the uh, end of the year, and a lot of people are also asking, with the Dow Jones going higher, where is the upside for Malaysia? Now, like it or not, for the Malaysian market, we are quite a very isolated situation, as currently a lot of local institutional are holding this. But when we get on to the next so-called information I'll be showing you is the foreign fund flows, right? So you can see in here we do have this is what I call the no demand, possible no demand, a breakdown next week. Whether we will break down the 1830 level is yet to be seen. Remember, next week we have Christmas, so very Merry Christmas in case I forget, to all Christian friends and those of you who are looking for a good break. Please have a good break during that time. For your information, Bill will be taking his holiday. He's going up to Thailand and be doing a visit to Thai Beverage, one of the counter that we have for our customers in there. So then we'll come back, probably have a lot of stories about Thai Beverage. One of the stocks actually making up Thai Beverage is a good counter. We have it for our client portfolio for that one. So that's for the KLCI now. Last week we were about 1841. Now it's about 1840. Now looking back at our note in here, we expect KLCI to consolidate because we already had 30 points. No, that was last week. We have a minor 2-bar reversal and a sign of strength confirmation. At that time, we were somewhere around here. Let me just blow this up so you can see it. Here, there was a 2-bar reversal, 1, 2, 3, 4, 5. We have this nice 18-day line change. However, if I give you a picture from a weekly standpoint, that seems to be good. Now, remember, every time when we have 4 up bars, we will see a minor correction. And actually, I want to see a minor correction coming into. Perhaps it may come next week with the Christmas as well, going to the new year. That will be good. Give us a bit more time to retest back at least 1830, perhaps going back to 1800. That will be a sell-off of 40 points. But knowing how an investor and trader will react when you see a 40-point sell-off, they are going to question. And a lot of questions of you going to ask me, are we seeing a sell-off now since we have 40 points correction in here? Now, like it or not, if since May the market went up to 1770, now it's 1840. We only gone up by 70 points. So 70 points in there, a 50% correction, it's possible, which is 70 points correction, give and take about 35 points, which is 1840, 1800. So that's the allowance that we should have. Corrections are good thing to have in the market, and make it a point to see correction as a good way to get in for those good fundamental stocks. Don't see it so badly as we got to sell and sell and sell. Remember, you are trading individual shares and not typically the market. Of course, the market are just an index. Now on the FBM 70, okay, things are not looking that good. You have this breakdown in here. We are likely to test the 200-day moving average of the FBM 70, which are the small caps and the mid cap stop. So that is telling me that this market is likely to break down, but we do have a support here, right, at the 1390.60. So I just want to see how that market retest back this old support at the 1396. But going forward, it looks like it's mushrooming down. Doesn't look very good to me for the FPM 70. So a lot of the so-called PWC stocks that we pick on, so-called penny warren stock, may not fare as well too. So take note of that one. I do believe hibiscus has broken down yesterday. So these kind of stocks are going to be affected as the market retests back the 200-day moving average. Very importantly, okay, ladies and gentlemen, watch that 200-day moving average on the two-bar reversal that we see previously in here. So see what is that's going to happen to that. Okay, so that's on the FPM 70. But on the longer term, switching to a weekly chart here, right, you can see we've been mushrooming down for almost 6 to 7 weeks in there. Will we see a huge sell-off? You have to have this washout. Typically a washout like this. That's to flush out all the weak hands order. Because like it or not, the small and weak cap stocks are those people who are fast on the trigger to buy and generally don't want to cut loss. So these are what I want to see, a flush out in there. If we do see a flush out, perhaps we might see a retest to the new high at 14,500. We continue to be bullish on the 2014. By the way, we do have a dates for a few people were asking about the market outlook for 2014, whether we are doing it like we did early